Investment planning is the process of matching your financial goals with your investment resources. It helps you to make a smart and strategic decision to grow your money wisely over time. This is important because it gives you a clear direction on how, where, and when to invest based on your personal financial situations. Let's look at some benefits of investment planning. First, it ensures family security by building a financial cushion for your loved ones. Second, it supports risk management by spreading your investments and avoiding putting all your money in one place. Third, it helps in tax minimizations where you can choose tax-saving investments instantly. Lastly, it prepares you for emergencies like medical issues or sudden. Now, here are the steps in making an investment planning. First, identify your financial goals, which know what you are investing for: a house, education, or retirement. Second, assess your current financial preparedness. Understand your income, saving, and liabilities. And third, check your risk appetite. This means knowing how much risk you are willing and able to take. And lastly, create a diversified investment portfolio. Invest in different assets such as stocks, bonds, or mutual funds to reduce risk.
So, the first issue or challenging in our topic is about the pandemic makes the Malaysian investor rethink about the investment planning. The first one is about unrealistic return expectation. So many investors in Malaysia today expect to be returns of up to 30% per year, for far above historical market average. This kind of overconfidence can lead to risky and also investment behavior, especially among the newer investor who may forget the rich quick schemes and also or the volatile asset like cryptocurrency and also meme stocks. So even experienced investor, while more informed, take on the higher risk than the necessary due to market optimizing. Second one is about the struggling to balance the safety and growth. So since the pandemic, more investors are increasing their savings, but a low interest rate means that their money is not growing fast enough to keep up with the inflation. So many choose low risk assets like a fixed deposit for security, while the others move toward high risk investment in research of better returns. The challenge is clear: it's becoming harder to strike the right and also a balance between the protecting the capital and achieving a meaningful growth. The third one is about the inflation and a rising cost. So the everyday costs from a grocery to housing, it is continue to rise, reducing how much people can save or invest. Inflation eats away at the value of money and also over time, and many traditional safe investment like a bond or fixed deposit can't keep pace. As a result, investors feel forced to take on a more risk just to perceive their purchasing power. Number 4 is about the cryptocurrency volatility. So with over 55% of Malaysian investors entering the crypto space, the appeal of the quick gains is undeniable. So, but the crypto markets are extremely volatile. Dramatic price swings can wipe out a savings overnight. To add to that, the lack of a regulation, and investors face high exposure to scams, fraud, and also unprotected losses. The last one is information overload and also misinformation. So in the age of social media, investment advice is everywhere but not always accurate. From the TikTok traders to influencers are promoting guarantee, which is a new investors are bombarded with the flashy, unreliable and also the information. So separating facts from the hype has never been harder, and many fall into the trap simply because they don't know who or what to trust.
However, while planning your investment, there are many challenges to aware of, especially the threat of scams in Malaysia. According to statistics, scam cases have dramatically increased. From 203 to 2019, there were fewer than 50 scam or unlicensed entries per year. But in 2020, it jumps to 168 entries, a 730% increase from 2019. In 2021, it raised further to 280 entries, and in 2022, it stayed high at 283. By early 2023, already 98 scams entries were reported by April. This shows how fast scam activities are growing and why it's important to be extra cautious when planning your investment. There are different types of scams happening in Malaysia. First, we have rising clone firms and social media exploitations. Scammers create fake investment companies on platforms like Telegram and Facebook. For example, Telegram scam accounts increased from 19 in 2021 to 329 by April 2023. Second, money moon networks are used to move scams money using bank accounts from innocent individuals. Some people were offered small commission but unknowingly became part of a scam. And third, the financial damage is very serious. In 2021, national losses from scams reached 35 million ringgit, and by mid-2022, the losses hit 24 million ringgit. According to police data, there were over 71,000 scam cases with losses of 5.2 billion ringgit between 2020 and May 2022. Finally, there are regulatory responses. First, the Security Commission has been issuing warnings, blocking scam websites, and promoting the investor education. Second, the Bank Negara Malaysia has also improved security by introducing stronger authentications by OTP migrations. And lastly, the government has established the National Scam Response Center to act quickly when scams happen. In conclusion, while investment planning brings many benefits, it's also important to stay informed and cautious. Always verify sources, check for license, and report any suspicious investment opportunities.
This section highlights the issue caused by illegal crypto mining in Malaysia, especially due to unclear policy. First, loss of trust in energy and tech. Malaysia's renewable energy and tech sectors are affected because of electricity theft slowed down innovation. This will cause investors to lose confidence, which impacts future income and development. Second, crypto investment is risky. Due to unclear laws, it makes crypto mining and investment riskier. People may face fraud, losses, and uncertainty about whether investments are legal or not. Third, higher electricity bills for everyone. Illegal miners steal electricity, so TNB suffer losses. To cover this, TNB might raise tariffs, meaning everyone pays more monthly. Fourth, landlords face big financial risks. Landlords may not know tenants are mining illegally. This will lead to huge utility bills and unexpected costs. So, better insurance and tenant checks are needed to be done by the landlords. And lastly, higher insurance costs or denial. Properties used for illegal mining may face increased insurance costs or have claims denied. This means owners get less protection and higher risk. In summary, illegal crypto mining not only impacts the energy sector, but also raises costs for everyone and creates financial risk for landlords and investors.
Lower ESB return in recent years has dropping from around 7% to 4 to 5%, have made it less attractive as a high yield and low risk investment. This decline, combined with rising inflation, means the real value of money saved in ESB is shrinking, pushing investors, especially a younger one, to explore another alternative like unit trust, robo-advisor, PRS, and even stock trading. The lower returns are also slowing down the progress toward long-term financial goals, such as buying a home or preparing for retirement, especially for those who relying solely on ESB. As a result, trust and loyalty toward ESB are beginning to decline, with some investors questioning if it's still best place to grow their money. This trend clearly shows a shift in investor behavior as more people seek better options to secure their financial future. Next, for the objective part, the main objective of this initiative was to increase investment awareness, educate on investment options and risks, and promote safe and informed investing. Participate were introduced to the importance of investing early and how starting small with consistency can lead to the significant growth over time. They were also exposed to various types of investment like ESB, unit trust, stock, gold, and property while learning how to choose the right option based on personal goal and risk appetite. Additionally, they can focus on protecting individuals from financial scam by emphasizing the importance of verifying license through trusted regulators like Security Commission Malaysia and avoiding offers that promise high return with no risk. Next, for the outcome, participants can walk away with a stronger investment knowledge, gaining a clearer understanding of key principles such as diversification, goal setting, and long-term financial planning. Many of them would feel more confident to start reviewing their investment. They can also develop better awareness and planning skill, learning how to assess their own financial goal, risk tolerance, plan for major life stages like education, home ownership, and retirement. Finally, they can also improve to their scam awareness, equipping participants with the ability to identify suspicious or illegal investment schemes and teaching them how to stay safe using tools like investor alert lists while avoiding get-rich-quick promises.
So this is our timeline group project, which is on the upper. We got our topic, which is the investment planning, and also we brainstorm and distribute the works. So on the May, we attend the seminar on our campus, which is UIDM, and also we got the knowledge, and also we can find the current issue about our topic. And the last one is June, we presenting our issue and also do the report.
This slide shares what we've personally learned during this project regarding financial planning. First, we realized that effective investment planning isn't just about choosing assets, but also understanding our personal goals, risk tolerance, and regularly reviewing our progress. Second, we also saw how external factors like market volatility and economic uncertainty can affect outcomes, especially if we are not well prepared or lack accurate information. Third, we learned that patience and long-term mindsets are essential. Sticking to a plan despite market changes and staying open to learning are key to success. Lastly, we recognize the importance of financial disciplines like having emergency fund and avoiding emotional decisions influenced by social media or unrealistic expectations. This reflection helped us become more aware of our financial behaviors and make better decisions in the future. And lastly, here are some ways we plan to improve our financial planning going forward. First, we aim to use digital tools like budgeting apps and robo-advisors to manage our money more efficiently and make smarter decisions. Second, we will also boost our financial literacy by learning about more various investment options like economic policies and market trends, especially in the Malaysian context. Third, another goal is to set clear financial targets and track our progress regularly. This helps ensure we stay focused and make more informed decisions over time. And lastly, we will strengthen our financial foundation by keeping an emergency fund and diversifying investments to reduce risk and maintain stability. Through these improvements, we aim to be more confident, disciplined, and future ready in managing our finances. That's all from us. Thank you.